All right, let's get right into it. If you're a trader, I'm sure you know the feeling. You're staring at a screen with literally thousands of stocks, and you're just thinking, where do I even start? It can be totally overwhelming. But what if I told you there's a systematic way to cut through all that noise? Well, there is, and we're going to break it down right now, step by step.
And look, this is the big one, right? This is the challenge every single trader runs into. Do you follow some hot tip? Something you saw in the news? It feels like you're just throwing darts at a board. But the good news is you don't have to. We're going to ditch the guesswork and replace it with a clear, repeatable process. So here's the big secret. Stop hunting for individual stocks. Instead, start looking at the bigger picture. The concept is called sector rotation, and it's basically our compass for the market. The idea is simple, but it's incredibly powerful. You see, the best stocks rarely move all by themselves. They tend to move with their entire sector. Think of it like this. A rising tide lifts all boats. If you can find the rising tide, the strong sector, you'll have a much easier time finding the best boats. Okay, first things first, we got to get organized. A clean workspace really does lead to a clear mind. So we're going to set up our trading platform to make this whole analysis thing super efficient. This little bit of prep work is what makes the whole strategy just click. It's a really simple two-step setup. All we need are two separate watch lists. One is going to be our sectors list, which gives us that 30,000-foot view of the market. The second is our stocks list, which is where we'll drill down into specific companies. And trust me, keeping these two separate is the secret sauce that makes this whole system work. Now it's time to build out that compass I was talking about. We're going to start filling up our sectors watch list. This is how we're going to map the entire market and see almost instantly where the money is flowing to, and just as importantly, where it's flowing from. So in your sectors watch list, you're going to start plugging in the major market indices. Now, we're using examples from India's Nifty index here, but the principle is exactly the same for any market. If you're in the US, think of the S&P 500 sectors. You'll add things like auto, banking, IT, pharma, you get the idea. Each one of these is a huge piece of the economy, and together they create our market map. Okay, so once you've added all those sectors, your list is probably going to look something like this. Kind of a jumbled mess of green and red, right? You can see auto is up, but pharma is down pretty bad. I mean, it's data for sure, but it's chaotic. It's not telling you a clear story. Not yet, anyway. But this is where the magic happens. Pretty much every trading platform out there has a sort button. And with one simple click, we're going to transform all of that chaos into crystal clear clarity. And there it is. Look at that. Just by sorting by percentage change, we get a clear performance ladder. We can see instantly that Nifty Auto is the strongest and Nifty Pharma is the weakest. All of a sudden, we know exactly where to start looking for long trades and where to look for potential short trades. The guesswork? It's gone. So we've got the big picture, our macro view. Now it's time to zoom in. We're going to build our roster of individual players, connecting our sector analysis directly to the stocks that make up those very sectors. Let's hop over to our stocks watch list. In here, you're going to use the Add Section feature, most platforms have it, to create little groups or buckets that mirror your sector list. So you'll make a section called Nifty Auto, another for Nifty IT, and so on. Then you just add the top most important stocks from each sector into their matching group. Simple. All right, the setup is officially done. Our workspace is organized, our lists are built, and all of that prep work is about to pay off. Now we get to the fun part, a simple but incredibly powerful strategy for finding high probability trades. The core principle here is so simple. Follow the trend. We are not trying to be heroes here, trying to predict the exact top or bottom of the market. Nope. We are simply trading with the momentum. If a sector is strong, we look for ways to go long. If a sector is weak, we look for ways to go short. We're riding the wave, not swimming against it. And seriously, this slide right here, this is the entire playbook. For a bullish or a long trade, you find the number one performing sector, then you find the strongest stock inside that sector, and that's where you look for a buy setup on the chart. For bearish or short trade, it's the mirror image. Find the weakest sector, find its weakest stock, and look for a sell setup. It's a logical filter that just cuts through all the noise. Now, for those of you who are maybe a bit more experienced and you're comfortable with a little more risk, there is an alternative approach we can talk about. This one focuses on the more volatile mid-cap space. With this method, we kind of set the sector map aside and go straight to a mid-cap index. And here, the name of the game is volume. High volume is your tell. It means there's a lot of interest from other traders. So you find a stock with unusually high volume, and then you go look at its chart, the price action, to find a potential trade.
And look, the potential reward with mid-caps can be pretty significant. Because these stocks are just so much more volatile, you can see moves of 10 or even 12% in a single day. That's some serious potential.
But, and you knew there was a but coming, right? That volatility is a double-edged sword. That same stock can just as easily drop 12%. The risk here is absolutely higher, no question about it.
And that brings us to this really critical piece of advice from the source material. While that mid-cap strategy is an option, that first method we covered, the sector-based approach, that's considered the much safer, more systematic path for most traders.
So there you have it, a complete top-down system for building a watch list that actually gives you clarity and direction. You're no longer just hunting for random stocks, you're analyzing the market like a pro. So the only question left is, which sector are you going to dive into first?